Welcome to SG Investment. Our channel is dedicated to helping you make informed decisions about your money and to guiding you on your journey towards financial success. Subscribe now and join our community of like-minded individuals on the path to financial freedom. Peter Lynch Investment Principles. Peter Lynch is a well-known investor and fund manager who is famous for his successful tenure as the manager of the Fidelity Magellan Fund. He has written several books on investing, including One Up on Wall Street, in which he outlines his investment principles. Some of the key principles that Lynch advocates for include: 1. Invest in what you know. Lynch advises investors to focus on companies and industries that they are familiar with and understand well. This can help them make more informed investment decisions and avoid getting caught up in hype or fads. 2. Look for undervalued stocks. Lynch emphasizes the importance of finding stocks that are trading at a discount to their intrinsic value. He looks for companies that are underappreciated by the market and have strong growth prospects. 3. Don't be afraid to be contrarian. Lynch advises investors to be willing to go against the crowd and invest in companies that may not be popular at the moment. He believes that this can lead to greater returns over the long term. For stay the course, Lynch advises investors to stick with their investments for the long term, even during times of market volatility. He believes that this is the key to building wealth over time. 5. Keep your expenses low. Lynch emphasizes the importance of minimizing expenses, such as trading costs and fees, in order to maximize returns. He advises investors to be mindful of these costs and to keep them as low as possible. 6. Do thorough research. Lynch emphasizes the importance of doing thorough research on a company before investing in it. This includes looking at financial statements, understanding the company's business model, and considering its competitive advantage in the market. 7. Diversify your portfolio. Lynch advises investors to spread their investments across a variety of companies and industries, rather than putting all their eggs in one basket. This can help to mitigate risk and increase the chances of success. 8. Consider the management team. Lynch advises investors to pay attention to the management team of a company, as they play a crucial role in its success. He suggests looking for experienced and competent leaders who have a track record of making good decisions for the company. 9. Be patient. Lynch advises investors to be patient and not to get swayed by short-term market fluctuations. He believes that a long-term perspective is key to successful investing. 10. Don't get too emotional. Lynch advises investors to avoid getting too emotionally attached to their investments, as this can cloud their judgment and lead to poor decision-making. He suggests taking a disciplined and rational approach to investing. Conclusion. Peter Lynch is a well-known investor and fund manager who advocates for several key principles in investing, including investing in what you know, looking for undervalued stocks, being willing to be contrarian, staying the course, keeping expenses low, doing thorough research, diversifying your portfolio, considering the management team, being patient, and not getting too emotional. Thanks for watching. Don't forget to like, comment, and share.